So I was talking about the Trump trade before and the stocks that were going up on anticipation of Trump winning that have still gone up. And, maybe the buy the rumor, sell the fact will take a little longer before the selling comes. But now the Trump trade is the inflation trade. Gold is now the Trump trade. Silver is the Trump trade. Mining stocks are the Trump trade. Big time. Because that is what Trump is going to produce. The markets have completely forgot about that in this euphoric celebration.
Peter Schiff has noted that gold has thrived under both Republican and Democratic leadership. During Trump's first term, gold prices reportedly surged by 54%, and under Biden, they've gained an additional 50%. Schiff also highlighted a UBS forecast predicting gold could reach $2,290 per ounce by the end of Q3 next year. He believes a Trump win might accelerate this growth, driven by the former president's policies on tariffs, spending, taxes, and interest rates. Schiff argues that what once was a Trump trade has now transitioned into an inflation trade, with gold, silver, and mining stocks taking the lead. However, he warns that Trump could face a far grimmer economic scenario if reelected, with national debt projected to skyrocket from $20 trillion in 2016 to nearly $37 trillion. He also stressed that the annual budget deficit has ballooned from $665 billion to $2 trillion, creating formidable challenges for any potential economic recovery. Regarding interest rates, Schiff remarked that today's 4.75% rate significantly increases the cost of financing debt compared to Trump's first term, when rates were near zero. Even with potential rate cuts, Schiff doubts a return to previous lows. He emphasized how gold, which stood at $1,200 per ounce when Trump took office, has since climbed to near-record levels, driven by mounting inflation concerns. If Trump returns, Schiff predicts the combination of rising debt, deficits, and interest rates will further fuel inflation. Schiff highlighted that over the past decade, gold has delivered an average annual return of 9.3%, with total returns of 143%, marking a major achievement after years of stagnation.
So let's take a look at the situation that exists today with Donald Trump coming into office, with the situation, or compare it to the situation in 2016. The economy is in much worse shape now than it was then. There's no question about it, that 8 years of more deficit spending, of a continuation of the hollowing out of our industrial base, all of the manufacturing jobs, the millions of manufacturing jobs that have been lost over that period of time, the record trade deficits and budget deficits that have been piled on, the enormity of the Fed's balance sheet, the final, we finally had inflation rearing its ugly head. We're just at the tip of that iceberg. But when Trump took office in 2016, the national debt was just under 20 trillion. As I am speaking, it's a hair under 36 trillion. We'll probably be at 36 trillion by my next podcast, even if I do it this week, which I probably will do, because we get an FOMC rate announcement tomorrow. Now, the FOMC should hike rates. I mean, that's what they should do, based on what's happening, based on plunging bond prices, based on the inflationary and stimulative, in quotes, effect of these massive tax cuts that are coming. The Fed should be hiking, but it can't hike. I mean, it's got everybody ready for cuts. And so it's probably going to cut, because if they don't cut, if the Fed doesn't cut tomorrow, can you imagine Donald Trump and how they're going to react? This is political. You are going to cut rates, but now that I won, you're not cutting rates, right? So they're going to cut rates, but that should fuel the fire that's already burning in the bond market. That means we just get more stimulus, thrown on this overheated, to use that expression, which I don't really like, but economy. Long-term rates are just going to go up. But so $36 trillion national debt. So, and it'll probably be 37 trillion, because Trump doesn't take office for another few months. And we're probably going to, tack on another $500 billion to $1 trillion of debt during those final months of the Biden administration. So you have an 85% increase in the size of the national debt. When Trump took office in 2016, the annual budget deficits were high, but they were $665 billion. Now, they were actually higher than that. I'm talking about the official deficits, right? The unofficial ones were bigger, but I'm just going to compare the official deficits in 2016 to the official deficits in 2024. So when Trump came in before, he was dealing with a $665 billion annual deficit. The annual deficits now, the official ones, are over $2 trillion. So the size of the annual deficit is 3 times as big. So the problem is 3 times as great now. If you had to try to reduce the deficits, it's 3 times as difficult now as it was then. And he didn't even do it then. The deficits got worse on his first term. Even though he promised to lower them, he blew them up. It would have been easier to lower them then. Not that it would have been easy. It would have been hard, but it's way harder now, given how much larger they are. Now, when he came to office in 2016, the Fed funds rate was 0.5% to 0.75%. The Fed had just raised interest rates from 0. There were 2 hikes before he came in. So when he came in, it was 0.5%. So he still had the benefit of all this cheap money. Right? Now, rates are, 4.75%? Yes, the Fed might cut a couple times, but they can't get anywhere near the really, really low rates that he enjoyed during the first term. So now we have a much bigger debt, much larger deficits, triple the size, and much higher interest rates that we have to pay to finance the deficits. Also, just to look at where gold was, because gold dropped today. Gold was only $1,200 an ounce when he took office. That was down from $1,900 in 2011. So gold was 37% below its peak from 5 years earlier. So it was kind of in a bear market. Now, we know it was in a building a base in a trading range. But of course, now, gold is making all-time highs. So you have a much more explosive situation.
Looking ahead, Schiff predicts the Federal Reserve will likely resume quantitative easing to manage rising interest rates and support Trump's tax policies. While this may provide temporary relief, he warns it will weaken the dollar and intensify inflation. He believes the current market focus has shifted to inflation-sensitive assets, including gold, silver, and mining stocks. Schiff also pointed out that retail investors have been gravitating toward gold and Bitcoin, channeling funds into ETFs tied to these assets. JP Morgan analysts foresee this trend continuing through 2025, with Trump's policies potentially amplifying investor interest. While many celebrate the prospect of Trump's return, Schiff remains cautious, warning that the economic promises being made are unsustainable and could lead to a collapse for which Trump would bear the blame.
The Fed is going to have to go back to QE, which is what I've been saying they're going to do. The only way to stop long-term interest rates from soaring and crushing the economy and the stock market and the banks and everything, right, that Trump is promising to pump up. The only way we can have these tax cuts, at least in the short run, is if the Fed goes back to quantitative easing to monetize the massive budget deficits that the tax cuts produce. Now, that is not bullish for the U.S. dollar. It's the opposite. That is not bearish for gold. It is the opposite. So I was talking about the Trump trade before and the stocks that were going up on anticipation of Trump winning that have still gone up. And, maybe the buy the rumor, sell the fact will take a little longer before the selling comes. But now the Trump trade is the inflation trade. Gold is now the Trump trade. Silver is the Trump trade. Mining stocks are the Trump trade. Big time. Because that is what Trump is going to produce. The markets have completely forgot about that in this euphoric celebration, right? The markets always look for a reason to rally, run the stops, get everybody hyped up and excited, overlooking what's happening in the bond market and that it's going to continue. And as it continues, it has to spill over into the stock market. Tomorrow will be a big day. And either I'll do another podcast tomorrow, I'll do it Friday. I mean, I might wait for Friday just to give people a chance to listen to this, because I know I got to talk about the reaction to what the Fed says. Although sometimes it takes the second day. Sometimes there's a knee-jerk reaction, and then you have the opposite reaction the following day. So maybe Friday would be a better time to kind of recap what happened on both Thursday and Friday and give people a chance to listen to this podcast. But, this is not, happy days are here again, and it's frustrating because I really wish I could celebrate. I got so many friends here. I had a bunch of people over my house on last night for a watch party, and we were up till like 2 a.m, like high-fiving and celebrating that Trump won. But to me, I have mixed feelings about it because I know what's coming, right? I know that all this is just BS. Right. I mean, I'm glad that the voters chose Trump over Harris. But again, they wouldn't have chose Trump if he had told the truth, if he hadn't told so many promises that he can't possibly deliver. He bought all the votes, including the crypto community, pandering to them, get their money, get their votes. We're going to set up a Bitcoin reserve. Right. So he was just giving out all kinds of money, promising the moon, and he can't deliver on it. And so I know this is not going to end well. And I'm still have the trepidation that it's going to be blamed because the media's already got the narrative. Because according to the media, the economy is great. Bidenomics worked like a charm. We have a great economy. Trump said he's going to fix it. If everything collapses right away, see what Trump did. And they're going to tie Trump to capitalism, free markets, deregulation, less government, right? So they're gonna really hang this collapse on free market capitalism and Trump. And if you thought Kamala was left wing,